Hello there. Oh, good heavens. Now I can see what I look like. Hi, everybody. This is a follow-up to the live event that we did on the economic outlook for 2026, Disruptive Abundance. For those of you who attended the live event, we got a lot of questions afterwards, and we also had quite a few people asking to see my presentation because the other presentation took a bit longer and I didn't want to keep people late. I didn't go through it. So this was an opportunity to make sure all the questions got answered, as well as to show just a little bit of what I was talking about in some slides and whatnot. So that being said, there's a lot of questions that came in, so I kind of, as usual, put them together. I will apologize in advance. This is literally the last day of tax season and things have been very busy. So my slides may not be as pretty as I normally would like. And I am kind of pulling this together mostly because next month I have a lot of travel and there won't be a webinar. So I didn't want everybody to wait 2 months to get answers. So that being said, just a quick reminder here before we get started is the regulators have said we can no longer use the chat function in webinars for reasons well beyond my understanding. So that being said, it is the rule. We can't change it. So if you have questions, Caitlin is watching live. Just connect at Sequoia, the email you got this invite from. Just respond to that email and send the questions, and I'll check in with Caitlin to see if any questions come through. I also realize that this is at a different time than usual and also kind of last minute, so many people won't be able to attend. We will be, as usual, posting this on YouTube afterwards, so you can watch it there. Or also, if you registered and are not attending live, you'll get the recording later. So that being said, just in case we do have any new people here today, my name is Kristina Kuprina. I'm Chief Economist at Sequoia Wealth Advisors, and we do these webinars about once a month. Just really to give an update on what's happening in the economy and answer questions people have. And the idea of it is that there's no agenda, no politics, just facts and data, but said in a way that makes sense to the average person and answers a lot of your burning questions that you have. And the economy is very personal. So the data I'm sharing is national data. It's big picture data. Completely understand that there's a localized, and sometimes I'll touch upon that. Factors that come into play. So like I said, if anything I'm saying this doesn't seem right, throw out a question. I'm perfectly happy to do them live. With that being said, I thought what I'd do today is talk a little bit just high level about the economy. My slides are not long, or they're very pretty basic, but the slides are basically answering the big question is, why is the feeling, the sentiment that the public has about the economy so different than the actual economy? Which has been a really big thing, and it's been going on since the pandemic, where there's been this really big disconnect. And I'm going to go kind of into that and a little bit of the whys and data. And then also, too, there was so much questions about the job market, jobs of the future, jobs that are being disrupted, that I'll talk about that a little bit as well. Again, I'll go over the questions that were sent in advance. If you have more, just send a message so I can get everybody's answered. So that being said, I'll start a little bit with the economy and especially the stock market, because a lot of questions right now around why, with everything happening in the world, is the stock market maybe even crossed today, I don't know yet, flirting with all-time highs. Why is the stock market doing so much better and with everything happening in the world? And I'll go into that a little bit too, because one thing always to remember is the news is not the economy. Sometimes the news will pull pieces of the economy into it, but much of what we see in the news nowadays is really attention-getting, politically motivated. There's a big reward now for making a name for yourself in the social media and the media world. So just kind of grabbing at the most shocking things and making them sound bigger than they are it's always been going on, but it's just really, really come to head of being a lot of what news used to be news, and now a lot of opinions are news. And a lot of it's motivated by different agendas. So sometimes it makes it really hard to know what is real and what isn't. Other times, something that could be very real to one subset of people doesn't necessarily mean it's broad economically impactful, right? So it is real, but it's kind of being used more as a piece of it for a narrative. So again, a lot of this, many people I think already know, but that's where sometimes there's a lot of confusion. With respect to the war directly, generally when we have these types of conflicts in the world, is usually immediate disruption within the markets and everything like that because of all the uncertainty that that brings in. And then things start to settle down. Obviously, what's happening in the Middle East right now is a moving target. It's really hard to know exactly what's happening. As many of you know, I have my Washington meeting every early Monday morning, and they give us updates of what's really happening without any politics or anything like that. Really insightful to see what's happening behind the scenes. And quite frankly, most of it is actually really positive. Things are being worked on and whatnot. And again, it's non-political, it's just more facts on the ground. But even then, and even with all the information we get, we just don't know a lot. A lot of it is, national security. It's a moving target. There's not a lot of things that are going to be shared, certainly with us economists. So it's really hard to know what's really happening and how long it will go on and what the potential outcomes are. And quite frankly, I don't think anyone knows, right? It's changing by the minute. But in the economic sense, that part of the world doesn't have a direct impact on our economy. Yes, certainly energy prices, we've seen the spike in oil prices, and it has an impact, at least in the short term, but they usually settle down because what happens initially is the disruption of the supply chain for oil and for energy. We barely get any energy that passes through that strait. So us in the United States are less impacted than, say, Europe. Europe is really impacted by it. Poor Europe. They try to wean themselves off of Russian oil and went to the Middle East. So, they're very much more dependent about or impacted by what's going on right now than we are in the United States. But oil is still a global commodity, so the price goes up according to supply and demand. And as long as that area is disrupted, as long as the uncertainty continues, it will be a challenge. Also think of it this way, it takes a long time for those ships to pass from one place to another. So it's not like they can turn around and go, oh, we don't want to go there, we're going to go here. It takes time to get there. And also these supply and demand and distribution, this is planned months and years in advance. So it's not like all of a sudden they can say, oh, we'll just go from here to here. They have to plan that. There has to be oil, there has to be the resources. So that initial disruption before everybody starts changing their shipping lanes and supply chains and things like that really create a lot of that. Also, United States, the price of gas and the price of energy is very state specific. So oil prices or gas prices, in California are significantly higher than in the Midwest right now, even with all of this spike. And there's a lot of reasons for that. I think most people know it's policy driven. The refineries closing down in California, the higher gas taxes and whatnot make the prices higher in certain parts of the country. The other thing is there's no pipeline from Texas to California. So it's not as if it's easy to get it domestically. You can just click your fingers and get it somewhere else. So these disruptions, like I said, can't be changed overnight. But over time, historically, we've had these conflicts, they settled down. However, it did have an impact on the inflation numbers. The government releases two inflation numbers, CPI and then CPI X food and energy. The reason they do that is the volatility of energy and food prices can throw the numbers off month to month significantly. So inflation, when you take out food and energy, barely moved. Well, when you add in energy, depending on which number you look at, 11 to 15% up. So that's a big jump. Now, the reality is you need food and energy. So in your lives, you definitely feel the impact of it, even though I said it can be very volatile. So the impact of the prices will depend on global economies and also how this conflict plays out. The highest expectation now based on previous conflicts is that we will see a decline in prices simply as the shipping gets realigned. So that question came up a lot. The stock market is really looking more at the economy. The jobs numbers was really positive last month. It showed that slowdown that we had was more of a temporary blip than a harbinger of things to come. Again, 1 month doesn't set a trend, but it is a positive data point. So the market's like that. Right now, the market is very focused on earnings season. Earnings season will start robustly next week, and we'll get the banks first. We'll get a lot of companies. And usually before earnings season, what we get warnings from companies that don't think they'll hit their numbers. And the reason is they don't want to surprise us. We don't like to be surprised. So they tend to want to give us guides in advance, and we've had very little warnings. So the market is seeing this earnings season is likely going to be very positive. Not every company, of course, and it's not just how they did last quarter that we look at. We also look at what are they guiding for the next quarter, what are they guiding for the rest of the year. Gives us a sense of how companies are feeling. The consumer is still strong. The consumer is exactly what's been running the economy. You guys have heard this before. 2/3 of our economy in the US is consumer spending. And the consumer has kept spending. Despite all of the challenges, the resilience of the consumers is the reason that the economy is doing what it's doing right now, despite all of the uncertainty that's happening. So that we watch very closely unemployment numbers, we watch very closely consumer spending, because it is a linchpin of the economy overall. Again, it's not the government that's running the economy, and it's not corporations, it is the consumer. So we watch that really closely, because that also, again, just shows you if the consumer really starts to pull back meaningfully, that is a big watch sign. Again, the employment numbers, we continue to see unemployment in the fours, and that's a very good number. That's the positives of the economy, and that is what's driving the markets right now, despite all of the uncertainty in the world. I talked a little bit about Europe, but I want to touch upon that, is that I am focusing this more US-based economy. However, many, if not most, all of my clients also have investments overseas. So we'll talk a little bit about that too, and the impacts of things. The geopolitical landscape is going through a major shift with this administration. So there's this constant not knowing from day to day what tariff rules will be, what trade rules will be, what any other rules or agreements will be. And that does create a level of uncertainty. Europe, I'm going to talk a little bit more about, because the biggest challenge to Europe is the dependency that Europe has on the United States, really, especially since post-World War II. We did a lot to help Europe rebuild post the war. Very low tariff rates, obviously NATO there providing their defense and things like that, which has allowed Europe to not have to focus on those areas, especially economically, right? They don't have to worry about a defense budget. They don't have to worry about other things, because they do have these agreements in place. We've kind of had their back by being the major funder of NATO and the major supplier of NATO. Now, obviously, that is sometimes feels like it could be in question and in flux if that's going to continue. And it is causing Europe to need to think more about their own defense, need to think about their own energy, need to think about their own trade, and become less dependent on the United States. I can understand politically where people can say it's a good thing or a bad thing. However, it's always a good idea for countries to be as independent as possible with the things that are most essential, because the global landscape can continue to change. Down the road here in this next decade, the US debt, and I'll talk a little bit about that in a moment, is going to get to the point it's untenable, and there's going to be some major changes. This is a math problem. This is not a political problem. Neither party has shown any interest in cutting back on spending meaningfully. We're going to be forced to do that at some point. So using that scenario, even if we're given everything to the rest of the world, we're going to have to cut back. And in doing that can create more disruption if there's not a plan for it. So for this uncertainty that's created right now could potentially create more resilience for other countries to be able to get past the point where the US is going to need to make some bigger cuts, especially with what they're doing what the US is doing overseas. Let's see. So I think that was kind of the high level one. I'm going to talk about something a little bit different before I jump into the presentation of the questions, because this is going to explain a lot of what I'm going to a little bit talk about. And it's a term that we use in economics. There's a couple different terms for it. We use unintended negative consequences, or else you use misaligned incentives. So misaligned incentives is kind of one of my more favorite ones. And I'll give you sort of some examples of this so it doesn't sound a bunch of like geeky economic stuff. So misaligned incentives are generally well-meaning ideas that weren't thought through. So the solution for this issue is this, but it wasn't thought through to the unintended consequences of that decision. And that's where you sometimes create problems, right? Because it hasn't been thought through. And I want to talk about some historical funny stories. One story can't be verified if it actually happened, but it's so common to stories it can be that I'm going to go with it probably did, and there's no real downside to it. Because again, I'll give you some more recent examples. And this story is called the Cobra effect. Okay, so Cobra effect. Basically, I want to say back in the 18th or 19th, probably 19th century, when the British Empire occupied India, there was a big problem with cobras. Cobras everywhere. Cobras biting people. Cobras creating fear. Just a big cobra problem. And their idea of how to solve the cobra problem is we said, we will pay you for every dead cobra that you bring to us, the British. Well, of course, that's a moneymaker, right? Let's go catch some cobras and kill them and bring them in and get our bounty. So they did that. Brought the cobras, got paid. Here's what happened. The incentive wasn't to solve the cobra problem. the incentive was to get paid to bring in a dead cobra. So, as you can imagine, cobra breeding farms begun. People began breeding cobras because if you breed cobras, you get more cobras and you get more money, and there's more cobras. It wasn't long before the British caught on to this and canceled the program. Bad idea. Well, what do you think happened to all those cobras? Released. Bigger cobra problem. There was another story, I think it was in the 19th century. This was, I think, the French in Vietnam, I believe. Similar situation, but it was with rats. Okay, so rats were a big problem, biting people, plague, all of the problems that rats bring. They wanted to eliminate rats, so they said, rather than bringing a dead rat, because concerned about disease, right, and whatnot, they said, bring in a rat tail. For every rat tail you bring in, we'll give you a bounty. Well, two things happened. Number one, of course, the same thing, rat farms. Rats breed. You guys know I have pet rats. Rats can breed. I don't breed them, but they can breed pretty rapid rate. So rat farms were created. The other thing is that since it was only the tail that you needed to get paid, people would just chop the tail off and let the rats go to make more rats. So again, they figured out the problem, stopped paying for it. All the rats got released. Bigger rat problem. So anyway, just a couple of funny stories from history there, and say, well, yeah, that was a long time ago. It's happened in more recent times in the United States with wild hogs, so wild boars, if I'm getting that right. So there's a few different stories. There was even the UN tried to, with climate change, tried to say, hey, we're going to pay for companies to reduce hydrochlorofluorocarbons, if I'm saying I'm not saying that properly. I apologize. Too into the story. So they said to companies, we're going to pay you to reduce this. So what a lot of companies in the world did is they started kicking up their emission of this, spraying, because then they could show a bigger reduction when the law took effect. So I bring this up because we have a lot of that in policy where we have this well-meaning, like I said, it's usually not bad ideas, well-meaning idea of how to solve problems, but not thinking through to what the results of that could be. And the same thing, throwing money at a problem that you see within society, whether it's anything, I don't want to call out anything specifically, doesn't have, if the reward is just money to the problem, it doesn't say what is the results we expect to continue to fund this solution. And sometimes it can lead to situations where there's not a motivation for people to make changes in the life that would be more beneficial to them. There's not a motivation for companies, individuals, regardless of socioeconomic status, to make changes because of that. So we see this a lot. And a big one is, and I know I got a question about it, so I'll talk more about it, is like in healthcare and things like that, where you have these misaligned incentives. So I bring that up before I pop over to my slides here, is a lot of policy that we have that sounds well-meaning isn't really thought through to how we solve for things. And this is going to be a lot of the big changes. It's going to make things more complicated because if someone says we want to cancel this program, it's not getting the results we want, there tends to be a lot of blowback to it. Oh, you're taking money away from this thing that we feel is very important. It's not only taking money away, it's rethinking the program to get better results. And so this is a lot of, you're going to see a lot of this in politics, a lot of what I call easy answers that are going to take more. And what does this have to do with economics? Everything. Because of the challenges that we'll be facing in the coming years with managing our spending in the United States and our debt levels in the United States. So that being said, I'm going to quickly just pop over to the slides because that's what you guys wanted to see. And again, my apologies that they're not as pretty as they could be. My priority is making sure you all get the money you need to pay your taxes in time. And that's kind of where my head's been for the last couple of weeks. Okay, so looks like you can see this okay. I'm assuming so. So here we go. And so this is what I want to talk about a bit. What is the big question that's been coming up a lot is the economy is doing well based on data. Okay, the economy is doing well based on data. Why are we not feeling it as individuals? If that makes sense, right? Why are we not feeling it as individuals? So that is why I wanted to kind of bring this here and show kind of a little bit of charts and things like that that kind of explains it. So this is the economic sentiment. Okay, so the economic sentiment is how people feel about the economy. Okay, this is a government generated report that comes out as part of our economic data. And you can see here, Sure. You can see here kind of how people felt about the economy. And this period here, that's before COVID, right? So this is the percentage of people that believe the economy is good or excellent based on this government survey. This comes out. So you can see pre-pandemic where we were at. And then you can see the pandemic, obviously, people don't feel nearly as good. But what's interesting is that even with we've had a rise in recent, last couple of years here, we're nowhere near where we used to be. And that's really telling because the stock market's at all-time highs, right? Incomes are rising. Okay. Yes, we have inflation, but I'll show you in a moment how that is such a small number, even in relation to the last 10 years, much less recent times. We have challenges, but all of the data is showing a strong economy. So to talk a little bit about this is the negativity in the media and the fear that people have is driving the sentiment more than actual data. And there's a bit of a disconnect here. Why is it? Big part of it, media, certainly. We all know social media, just it's a drumbeat of negativity. That's what sells. That's what gets you to click. In the social media world, it's all about influencer and how many people follow you and how popular you are. And so you got to be scary. You got to be loud. You got to make things big. There's also sometimes narratives around political or social beliefs that can drive the data of saying, well, we're going to focus on this stuff instead of this stuff because this drives our agenda or our narrative. And I will add one other element to this too, is there's a lot of uncertainty. And in the past, you wouldn't get exposed to so much news and media as we are now. I mean, you can't get away from it, right? If you have notifications on your phone, you're hearing it. Whatever you're subscribed to is telling you what it thinks every moment. So that constant exposure to information, usually not positive, does have an effect on people, energetically and emotionally. It's just the reality of it. But I wanted to show you this because it really just shows you, again, all of this data, as you can see, I cite all my sources because I want you to be able to look it up for yourself and not just say, Kristina said. This is all Federal Reserve Bureau of Labor Economics. So it's statistics. So this is all, official data. It's not me making up a chart. So that was the one I wanted to show you. And then the other one I wanted to show you, and again, I'm going to talk about this more because these are just trying to answer your questions as fast as possible to get into the fun stuff because I don't really like screen sharing. Jobs added by sector. So we keep hearing how bad the job market is and how difficult it is to find jobs and jobs are being lost to AI. And we just hear this constantly in the media, but that's not been the case. I actually track jobs lost by AI. There's a way of doing that. And we've lost very few jobs due to AI. And again, AI is kind of broad-based for technological advancement, but we haven't, and nothing, compared to the last couple of years when AI was very, very small part of our daily lives, right? We're not seeing that. Will we in the future? Likely. Will it be this devastating loss of all these jobs and we're all going to be unemployed and whatnot? Unlikely. Possible, but unlikely. But it's not going to happen in the next couple of years for sure. And I say that for a lot of reasons, which I can explain if time permits or if you actually have questions and want to know. We usually get this anytime we have a technological advancement. The world is changing. The world is ending. For a lot of jobs, right? All those things are going to happen. I will tell you quickly on this is I have a company I worked for a lot of years. And I remember going to see them in the 90s and they had a whole floor of people doing accounting, right? All the time, 10 key. That was accounting, the finance accounting department. And then Microsoft Office came out and then Excel spreadsheets came out and that shrunk to like 8 people in a cubicle. Because the technological advancements with Microsoft Office means that they didn't need as many people to do the same job. But yet there were other jobs created. And that's what happens. So it's disruptive. Remember, I talk about disruption. It's certainly disruptive anytime we have these changes, but it doesn't mean jobs disappear. And because of the popular demand of it, I will also show that jobs chart. But that's just kind of where's the hiring happening? Where's the hiring happening right now? This really tells you kind of jobs added by sector over the last 12 months. So we're seeing, actually my world is less hiring, but we definitely see a lot of that taking place, especially in these sectors here. And despite all of the talk about Doge and cutting back on government employees, look, they're number 3. So we're hiring. Go back to passive disclosure here. This is sorry, you see the horse thing again. This is the other one I wanted to show you, and then I'm going to drop this and go into the more explanation. Inflation. Keep hearing about inflation, right? How terrible inflation is, how terrible it is. We had the most recent spike we had in inflation was back in 2022 or 23. I don't remember when it hit its high point. And we're at 9.1% inflation, defined by CPI. We're currently around 4. So we're less than half where we were just a couple of years ago, though that was a spike, and that spike was in direct relation to the reopening after COVID and all the money the government had pumped in the system. There's pretty much no debate about that economically. You throw a lot of money in the system, that creates inflation. It's just how it works. But I wanted to show you this chart quickly because this is historical data, so it kind of puts things in context. You see that little bump right there? Should Bill make this chart small, bigger? The little bump right there, that chart, that bump is at 9%. Okay, that's where we are today. But look where we were, and I'm not talking about 1980s, right? I'm not going back to the super high inflation we had back then. I'm just looking at recent time. Post-COVID, we had higher inflation. Pre-COVID, going back here, financial crisis, COVID's here. Gray lines are official recessions. So we had a technical recession in the beginning of COVID. We had a technical recession in 2022, but they don't count as official recessions because they weren't called, because all the data didn't say recession, just the technical data. So that's why you don't see the other 2 recessions here. So this is the 2008 crisis. So as you can see, inflation was significantly higher before and after the financial crisis, and here's where it is today. So I'm going to stop sharing here because, again, I find it distracting to go back and forth between the screens, and I feel a little less present. I will send this data to anyone who wants it. If you want to look it up for yourself, Federal Reserve, FRED, F-R-E-D, is where all the charts are. So I think it's fred.gov. You can pull this data and information for yourself if you're curious. The reason for showing those charts, again, is putting things in context. I also had one for oil to show you that oil 4 years ago was higher than today, even with the spike. It's really to put things in perspective, because sometimes when the media talks, it makes it sound much bigger than it was. And if you go back to your lives and say, what was my life like before the COVID? What was my life like today? Inflation was higher. Stock market was lower. Employment is at the same level. How was my life then? How is it now? Again, there's this almost like this change in feeling. And I also want to note that the sentiment that's declined significantly since the pandemic, despite the economic data, was through 2 different political administrations, through the Biden administration and through the Trump administration. So it's not directly correlated to who's in the White House. It is this general, I'm going to use the word malaise for a lot of people, but it is this sort of feeling of things aren't as good. The last thing I'm going to say on that part of it, this part of it, is economy is very personal. So I cannot stress that enough. So this is national data, right? It's national data. Your inflation could be very different. I recall distinctly post-financial crisis when inflation numbers were relatively low, and we're doing calculations. But if you're sending your kid to college, if you were trying to access healthcare, inflation was quite high, right? So it's how you're using the system. What are your personal economics? If you're in California, Northern California especially, and you've seen your PG&E, double in the last 4 years or so, right? Your fire insurance skyrocket. Your cost of living is a lot higher than some people in other parts of the country. So it's regional, it's national, and it's also local. What is your spend? What is your income to your spend? You've also heard me say this, but I think it bears repeating here. In recent years, people who have assets, okay, real estate, stocks, any asset that appreciate, have had this appreciation in value, significant. I can't tell you how many estate plans are being rethought right now because people are saying, like, I have a lot more money than I thought. I do not need to give this all to the kids, just because of owning retirement accounts. We're not talking about the ultra wealthy here. We're talking about the average middle class American who has retirement accounts, who has some stock accounts, who owns a home, has seen this appreciation in value that is significantly different than for those who don't have assets. Okay, so those who don't have assets are being crushed in many cases by the rising cost of living, right? They don't have anything to offset that. So their income, while it's rising, is not rising as quickly as the cost of living. So I bring that up just because I think it's very important to acknowledge the fact that economics is personal, and that's why planning is so incredibly important. So that being said, I was trying to get to questions on the second half. So the other thing that I wanted to touch upon here is when I was, kind of showing a little bit of that, chart around inflation. Is inflation is a basket of goods and services, and that the government is using to track this. That does change over time. So what they used for the inflation basket in the 80s is different than today. So these numbers are adjusted for that, just because it's constantly shifting, because things that we didn't buy back in the 80s, we now buy. Imagine that, like a computer is essential now, right? A cell phone or a smartphone is essential. And so there's a different kind of means on that basket, and that changes even within the food. So I'm going to look super quickly here. Okay. And I'll go into your questions if you are ready for them. And again, if there's a time, there's two other things that I'll bring up here. And oh, I got another one. Okay, let me start with questions. I feel I got more. Let's see. Can you talk more about the economy, stagflation, recession? Well, I touched upon the economy on a pretty high level. So we are not in stagflation, and it's unlikely we will be, because inflation, the 4%, and the higher inflation numbers in the fours. You guys heard me talk about that last year. We knew it was going to happen. The war and the energy prices added to it, but it hasn't changed it. We knew that we were going to get a spike in inflation in the beginning of this year. So that's where we are. Almost certainly, barring a big shock to the system or something unforeseen, we will start to see those numbers decline closer to the twos by the end of the year, maybe sooner, right? And which is a good thing. That's the Fed's preferred rate, is right around the twos. I don't know if we'll get to two, but we may be in the higher two. We don't know exactly yet, because there's some variables. But this number, this bump in inflation was expected even without, I don't know if I'm supposed to call it a conflict or a war, whatever is happening in the Middle East right now. So I don't see stagflation. I don't see huge growth. This year was never expected to be a big growth year. It expected to be positive for the stock market, but we don't necessarily see really big spikes in growth. But it's still a positive year, right? And that was very much what we saw last year, right? It's quite a positive year, but the growth wasn't huge. And don't see a recession. Really, there's no data reflecting recession, at least in the coming quarters. So we watch that one really closely. There's a lot of little kind of warning signs we get. And the last time it was really clean, when we had a real clean warning sign recession, was the summer of 2008, spring, summer. We knew that we were heading to recession. So there's enough data, and we get enough advance notice. Doesn't help for shock recessions, right? So the COVID recession, didn't see that sucker coming, right? Because it was a surprise, and there was no data that was showing us ahead of time. So if barring a shock or a surprise in the system, no recession, no stagflation, at least in the coming quarters. Earnings season, as I mentioned, is starting. Earnings season is my favorite time of the year. I get it 4 times a year, each quarter. Why I love it is because it's like Christmas. I get to open all these packages and see how our company's really doing. You can't lie on earnings. All right. So we have to know facts on the ground, guidance, everything like that. They're very, very careful what they say. And it really tells us the state of the companies and how they're doing and what they see and what they're doing differently. How are they navigating the changing tariff landscape? How are they navigating, if it applies to them, to changing price of commodities, oil, etc.? How are they navigating technological change, right? All of these things are really important, because you actually hear from the companies, and there always will be a company saying we're being crushed by tariffs. There'll always be a company saying we're being crushed by prices. There will be those companies. Sometimes it's excuse making, because we're like, you weren't doing well beforehand, so just knock it off. Other times it's legitimate. They didn't plan well for it. Energy companies plan very well for geopolitical events. They hedge the price of oil to help protect them. Farmers do the same. They hedge the price if they're commodity, if they're farming, what I call the commodity farming, soybeans and things like that. Most companies do hedge for these things because they're known potential risks. But sometimes, yes, companies can not be as nimble, especially smaller companies, to adapt to change. And so some will be what I call legitimate, and some will be excuse making. So we watch that, but we look more not for individual companies. We look for a trend. Banks next week, there's a lot of issues in the private equity space, a lot of bad debt, some in the commercial real estate space. So we're watching that closely to see what, if any, banks are at risk from that. So there are always things that we're looking at, even in a company's earnings report, individual company, that if we see a trend within that sector, then we can see we can kind of extract how the economy is doing from that. Let's see, next question here. Sorry, I didn't have a chance to read all of them on the list you gave me. So, how will a blue wave in the midterms change the outlook? Um, this, I don't know the answer to that one. And the biggest reason I know the answer to that one is whether it's a blue wave or a red wave or a purple wave, we just don't know because it depends more on policy than it depends on what party they belong to. So, and if a blue wave is a moderate blue wave, it's going to be a whole lot different than if we head towards socialism, right? That would certainly not be good for the economy. I'm not telling anybody how to vote. I'm just saying we go too far into socialism, it's definitely not going to be good economically for all the reasons I think we most all understand. So it's not so much what party's in power, it's more the policies that they're putting into place. And I don't want to say what their focus is. So yeah, blue wave, red wave, purple wave, that doesn't in itself, the markets historically like, what is the word for it? When it's mismatched, right? When you've got one controlling one side and one controlling the other side. I don't know why the word's escaping me right now, but they really like that when we kind of have that kind of more of a lock situation because you generally don't have as much big policy changes and markets are not as fond of uncertainty. So economically, having kind of like where we're at now, right, where it's really close and it's hard to do some big things without major consensus is generally better for the economy. And I don't know, I would change the outlook more post-election when we see who's in office and what their focus is on, more than if it's blue or red or anything like that. Usually I update the economics post-election. Just as a reminder, midterm years are usually volatile in the stock market. So no matter what direction we're going, the markets may be a lot shakier, especially as we get more focused on the elections. With the high gas price due to the war, will the high gas price due to the war send us to a recession? Highly unlikely. If it's very high in a sustained way, it certainly can have an impact on the economy. The average consumer, uses much less of the household budget on an energy than they once did. There's a lot of reasons for that, but it's around 3% of the average household, and that includes parts of the country that use have heating oil, and things like that. So collectively, our household budgets are much smaller. But certainly, when you go fill up that gas tank and you look at that amount, it can make you maybe want to hold back in spending in other places. The biggest spike that we had, let's say in the recent times, was back, I want to say around 08, 09, I don't recall exactly when it was. Under the Obama administration, we had 150 plus oil for a period of time, I believe due to something happening in the Middle East. I don't recall what the cause was at the time. And the interesting thing about that was it actually didn't really change the economy at all, but of course it was a lot of noise because for whatever reason, our leaders always get hammered about more almost than anything else about gas prices. Gas prices are the big Rage Against the Machine, like little stickers people put on there. I did that with the politician's face. It's really, for whatever reason, it really just gets people upset with the leadership when gas prices go high. But the fun thing that I noticed when that big spike happened, the 150 back then, was all of a sudden you saw SUV sales drop and Prius sales go up. This is before we had, Tesla and EVs and everything like that. But you saw that people would actually literally change how they purchased a vehicle that for most people they drive for quite a few years based on that short-term spike in prices. We saw, and when you had a real big drop in oil prices some years later after the financial crisis, all of a sudden SUV sales started going way up. But yeah, during that time when prices were high, I believe it was almost impossible to get a Prius. They were that popular. So you will see economic changes that will happen potentially over it if it's sustained for a long period of time. But that in itself won't send us to a recession. There will be other factors that be added. Let's see, what will the impact be on California with the wealthy/business leaving? It depends. It's really hard to know. It's kind of one of those things you get the data sort of after the fact, except for the big names that leave, and there's a lot of noise about it in the media, so you can kind of know some of it. But yeah, maybe this around the billionaire tax that's being proposed. Was, I don't know if that's still the case because so many have left, but there used to be like 200 billionaires in California. And they're paying a lot in taxes. I saw the number before. It's like the percentage of California's budget they're paid for by those people alone is huge. So yes, it's certainly of impact. However, right now, let's say a whole bunch of them left and the revenues are going to drop, and you won't really know this until we don't even get those reports till later in the year from this tax filing. The tech companies are doing really well. So believe it or not, I don't know the final number yet, but California is estimated to bring another, oh gosh, I'm going to get my numbers wrong. So please put an asterisk on this, maybe 40 or $60 billion. I don't remember, or million, I don't recall the number. But anyway, there's a big jump in the revenue that California's collected from the tech companies because the tech companies are doing so well. A lot of these big tech companies, Nvidia, et cetera, pay their employees in RSU stocks, which are taxable upon receipt. So there's a lot of taxable income coming to the state when the tech sector does well. And that, if the tech sector continues to do well, could potentially offset some of the loss of the revenue from people leaving the state, high earners, or high taxpayers leaving the state. It's unknown. Because, and also too, it's a moving card. The challenge of California always has been is it's boom and bust. If the economy does well, California does well. And if the economy does poorly, California gets in trouble. If you remember the furloughs and all the big cuts that took place post-financial crisis, it was pretty meaningful and went on for a long time. So it's collectively how much money the state collects. And that's why you see the governor not wanting to pass rules limiting AI and tech in any way, shape, or form. If he does this little tiny one here and there, because he doesn't want to disturb these companies, he does not want them to leave, because it is huge for California to get that revenue from the company. So ultimately, it's a net. It just depends on what California collects and also how California spends it. So too soon to know. That will tie into another question here. I'm skipping past a couple because it's what about the billionaires tax? Will it really work, or will they all leave? So I think those two are connected. I understand all will do anything. People live where they live for a lot of different reasons. It's certainly a driver because these taxes rarely stop with one group of people. So it's very populist to say, billionaires, they need to pay more. Billionaires need to pay more. But the billionaires have options and they also have mobility. So do you want to keep them and keep the higher taxes they pay, or do you want to drive them out or try to collect afterwards? There's a lot of very settled law about taxing someone after they've left a state. There's a lot of very settled law on taxing wealth. So these two things, even if that passes, I really think it will pass because it's very populist, right? And there's only 200 or less voters that might vote differently. It may pass, but I think it'll be in the courts for a long time. It'll be very hard to actually implement just because of that historical precedence on pretty against outlaw. New York tried to do the same thing and it failed. So it's not, it won't be easy to be able to do. The thing is that if people leave, they don't usually come back. So is this a bad idea if it doesn't take effect? But it also scares people off that are helping support the state. Again, I understand this can be completely political, or there'd be a lot of beliefs on it. But from an economic standpoint, it's hard to know, like I said, though I do expect it'll pass, but maybe have a hard time being implemented. The other thing is it's really, really hard to tax wealth because a lot of wealth is really hard. It's easy to know what your stock portfolio is worth, but it's not so easy to know what a private private business is worth or other assets are worth. So that even that disagreement could be in the courts for a long time with the individuals. So more challenging. My biggest challenge I have with that bill in itself is that the revenue per the bill, right, which is always optimistic, that it expects to generate from this tax will only fund what they say they want to fund for a couple of years. It's math. So there can be no dispute to this, right? They literally, they say, this is what we expect to collect, and this is what we're going to spend it on. And I look up the cost of the program, and I'm like, well, that's going to be 3 years. So when they run out of that money, they have to start dropping that tax down, right, to lower and lower groups. And then, it gets, millionaire tax, and then that hits anybody that owns a home. So I'm not saying this to be scary. I'm only saying that it's not really solving. So remember unintended consequences. Remember misaligned incentive. It's not really solving for what they're looking to solve for in the longer term, but it's widely populist. And right now that's really popular to do. Can AI be used to invest? Not reliably. And when you say invest, to do research, yes. But be very careful. AI still hallucinates. And I actually will, because I'm talking about AI, I'm going to read this quote to you really quickly, if I may. Use AI to expand your thinking, not to outsource your judgment. Okay, so you want that quote, I'll give it to you. I saw it, I love it, I keep it. So yes, AI can be used for research. Be careful that it can be wrong, and don't depend on it. Don't outsource your judgment, right? As far as a trading tool, there are some systems that have been used to do that. It reminds me of quant trading when it came out years ago. It's like, oh, computers are going to replace the humans, and never did because it's not that good. So far, there's two ways. There's some portfolios that are created from some portfolios that are created from like AI systems, and other ones are created by agents. I've looked at some of them and I played with some of them. I would never use them because, again, they hallucinate and do make mistakes. And they also are terrible, terrible at sensing the energy of the economy, the people and participants. They're looking so much at past data that the accuracy hasn't been there. Could it someday? Possibly. I'll never say no to anything, but it's not there yet. Also, the training of the agents is really important because they run wild. They just have no sense of anything. A whole nother conversation talking about AI agents. But yeah, not yet. I would not trust it yet. It's not ready for that, but it could be something in the future. But how we teach it to be customizable to individual situations and also to be more forward-looking, that will be interesting. Let the AI people figure it out. So not yet. The cost of healthcare and healthcare reform. I got 15 minutes. Let me come back to that one. I'll talk about misaligned incentives. The healthcare system. If I ruled the world, or if I ran the country, whole thing needs to be redone. The healthcare system in the United States is completely full of misaligned incentives, unnecessary bureaucracy, unnecessary costs, unnecessary systems. There's so many easier and better ways to do it. The more money we throw at it through programs is not getting better patient outcomes, and it's creating phenomenal complexity in there. And again, not better patient outcomes, which is the point of it. So yes, that would be a whole webinar in itself. There are some really, really good ideas, but you have a lot of entrenched bureaucracy in it, and you have a lot of financial incentives that are not necessarily aligned with the end goal, and a lot of big campaign donations to both Democrats and Republicans to keep the system going. So it's going to take a lot of work, but yeah, the entire system really needs to be redone for the better outcome of the patient, both for preventative care and also for care when the need arises. So yes, and the cost isn't going anywhere. All of the programs that we put in place have not done nothing to address the cost of healthcare. The only thing we keep changing is who pays for it. Right now, corporations, businesses, unions, governments, they're paying for it more than individuals are. Is the event of recent healthcare things. And it's so difficult that even when there's temporary support, like there was during the pandemic, right? Get more people on the system temporarily during the pandemic. When that gets taken away, it's catastrophic because the costs have gone up so much, right? So this is going to be something that's going to be said. It's going to be a really big thing. Highest intention, we get really good politicians in place that will be bipartisan and work together to solve these issues. There are solutions, just need the right people. Let's see. Okay, I'm trying to do this quick here. Long-term care as part of retirement planning, question mark. Yes, it can be an important part of many people's planning, and there are many, or a number, I should say, different ways to plan for it. Everything from purchasing long-term care insurance to self-funding, to having a plan in place. I'm not giving any advice here. These are just different ways of doing it, borrowing against the home. There are many different ways to fund it. My strongest advice on this one is work with planners. And I'm not just tooting Sequoia's horn, okay? Certified financial planners that will help you navigate the space. Ideally, that don't sell the product. It's helpful because there's not that conflict, right? Misaligned incentives. You'll be able to really just do the analysis and show you here's all the potentialities, here's the pros and cons of each one, and help guide you to the one that may make most sense for you. Also, before you retire, many employers offer long-term care insurance that is portable once you leave. So, and it's a lot easier to qualify for it, right? Because it's part of an employer group. So looking at your company's benefits can really help, but I would definitely say just get that outside expertise of certified financial planners. People have an expertise in this space. Yes, we do that, but I also want to make sure that you don't feel as if it has to be Sequoia. It could be another company. But when you don't have that incentive there, that wouldn't be narrowed into this is the solution. But it is something really important to look at because because I'm doing distributions from portfolios for the cost of care, it is not cheap. And you really want to have choice when that time comes of where you or your loved one is going to be. So definitely plan for it, and definitely is an important part of financial planning. What is the future of Social Security? Oh, well, it depends. They're working on, it's actually fascinating in Washington. They're working on a lot of really great ideas. So as most, if not all of you know, Social Security is going to have a funding issue in upcoming years. This is more of a demographic problem than is a political problem. It's just simply we've got a lot of people on it, more people going in the program than new people coming in to pay for the program, right? We have a demographic shift. Us as economists have known this for a long time. We have more people into Social Security and into Medicare and leaving the workforce than we have coming in and paying for it. And so our system right now is designed on that, which is where it's going to come into with the whole AI thing, is if we have less workers in the distant future, not right now. In the distant future, if technology means that we need less workers doing the redundant jobs and we have more workers that are human connected, how do we fund these programs that are traditionally funded from payroll taxes, right? Do we start, or deductions from payroll, I should say. Do we begin saying, hey, company, you're using all this AI, you're more productive. Now you will pay into the system, right? Less employees, more productivity. But there's a lot of great ideas. Like, don't ever think all of this is like, oh, bad. There's great solutions for it. We just have to rethink how we do things, right? Because we will need to continue to fund these programs. But there is talk about modifying Social Security. This has been in Washington through multiple administrations. This has been ongoing with working groups within Congress trying to figure out the solutions to this issue. Some ideas have been floated around is cap the maximum amount of Social Security at $100,000 per year per couple. These are ideas. None of this is policy. Another one is considering that younger people will work longer because we're living longer. When Social Security first started, most people died before they collected. Now people are living on for 30 or 40 years. Do we rethink how long people work? Then if we rethink that, there's a big difference between someone like me that can easily work into my 70s and 80s, right? As long as my brain's working. But if I was hanging drywall since I was 16, probably not. So there'll be a lot of considerations here, but I just want to give people this hope and confidence, and this behind the scenes, there are people looking at the solutions for this. We just have to rethink a program that was designed for a much shorter lifespan. And we do have the ways of continuing to support the program. There's also a lot of people that absolutely depend on Social Security to survive, and there's other people that are collecting that don't need it. They just don't need it. They have enough wealth and income. So we rethink, does this become shifting more towards a social program? Unless you put into it, you get it. None of these are my ideas. These are all things that are being worked on. So I'm just sharing that with you, that there is planning around this. Okay, two more questions about recession. I think I answered that. I did not make this question up. I legitimately, two people asked it. Asked about, what song did you play at the event? I talked a little bit about the song, the Abundance song. I'll just be quick about it. It's on YouTube, Apple, iTunes, Pandora, all the rest of it. Just look under Sponge Master, sponge like a sponge master, and it's I Choose Abundance if you want to look for that song. So I did see a couple of hands raised and some symbols coming up here. I cannot respond to the chat if you did not hear that in the beginning. So unfortunately, regulations mean I cannot respond to chat. So if you have a live question, I have just a couple minutes here. Please send it over to Connect@Sequoia, the email that you got this invitation from, or you can email me later. I will get you answers to your questions. You don't have to do it live and in real time. And I wanted to kind of bring this all home with, we're in a world where sometimes, everything seems pretty crazy. Just a lot of this conflict, both domestically and overseas, a lot of the partisan back and forth, whatever we call it, divisiveness. We have a lot going on in the world. And one thing that I love to do is I have a strong belief that where you focus your attention is what you bring into your life. And it's quite true, right? Think of it this way. If you're hiking in a path in the forest or anywhere, and if you're in your head and you're thinking about, all these things happening in my life or in the world, and you're thinking in your head, you don't see the beauty around you anymore, right? You don't notice the trees and the birds and the flowers and all of these things. And all of a sudden you come upon something that captures your attention, like, oh my gosh, look at that beautiful super bloom, or something comes up. So it's where your attention's focused and how you feel and what you see. So we recently had the Artemis launch, right? The spaceship that went around the moon. And that's a pretty powerful story, regardless of your political or social leaning or and economics or anything like that. We went, a diverse group of astronauts, highly trained, highly skilled. They got in a spaceship and float around the moon, and we're analyzing everything, right? All experts analyzing everything. I can't wait to see what they say. I can't wait for the whole story. But it was just a beautiful scene, and it was the government. NASA took the lead, and there was public, private working together. SpaceX and other companies worked together to make this happen. So public, private, different groups of group of people coming together, different expertises, fly around the moon and made the perfect landing. And that is a way of kind of thinking optimistically of what we can do when we work together as a nation, as individuals. It doesn't mean we have to agree. It doesn't mean we have to compromise our values or our beliefs, but finding ways to work together, be it politically, socially, or individually, is where the power rises. And I was fortunate to be able to watch the landing because it happened on a Friday evening. And I watch it not because I'm a space geek or I'm an expert or I knew the first thing about most of what they were doing, but it was just beautiful to see that come down and the astronauts come out. Well, they couldn't walk well in zero gravity. Just come out they were just beaming. They were just beaming and they were optimistic and they were excited. And that's just a reminder of what we can do when we come together. As we roll into this midterm season, just, think about that. How can we do things together? How can we look towards the optimistic sides? How we focus on the beauty in the world, the positivity in the world, and less so on the rest of it. And that is sort of what I wanted to say on the closing. Not that I'm trying to get the sentiment numbers up, but at the same time, it just for everyone to just feel better and to focus on that. Know that I'm paying close attention. If things change, I will take action. But this is where we stand today. It is a midterm season, like I said. There will be volatility in the markets. There will continue to be surprises. If it's something we have to take action on, I will. Sometimes it's opportunity. Sometimes we have to be cautious. I will continue to watch that. Always let me know if anything has changed in your life that I do not know about. That is very important because I'm running the portfolio based on our last conversation. And if something meaningfully has changed, I need to know because I want to make sure I make the adjustment so that money is there when you need it. Even though the growth looks good, there will still be times of volatility, and that is just part of the price of admission of investing. So any questions, anytime, reach out to us. And we'll keep you posted as the changes happen. And thank you all very much for attending these webinars, for listening after the fact, and also for those of you that came to the live event. I wish I had more time to spend with everyone there, but just know that it was very special to be able to see many of you live. And final thing, if you have any ideas or suggestions, don't forget we have access to amazing people. Amazing economists, experts. We have the ARC people talking about innovation and technology, talking about areas of the markets. Next month, I'm going to close with this one. Next month, I will be in Peru at our webinar date. So Katie is going to be running it. Katie Linfeld is our certified financial planner. Many of you have seen her on webinars in the past. Attend this webinar. We're going to talk about cybersecurity and protecting of fraud and elder abuse online, right? If I'm using the right terminology, it probably is a prettier title than that. Please, when you get this invitation, send the link to anyone you know, someone who's older, someone who's vulnerable, someone who's at risk. This is where I have an expert speaker come out and talk about ways that fraud is committed through, and also cybersecurity protections. This is designed to protect our most vulnerable people in our society because they're getting really sophisticated on ways they're stealing information and ways they're defrauding people. Especially with the more advanced technology. So please share this with everyone. Katie's going to do it, and it's going to be an expert in this space. Again, we'll be promoting it, but I just wanted you to hear it from me first. So thank you all very much for listening, and have a wonderful afternoon, and happy end of tax season. We're done. Yay. Bye for now.